Welcome to the deep dive. We're here to unpack complex sources and really pull out the key insights, getting you up to speed fast. Today, we're diving into something fundamental a company's financial results. They tell us so much about its health, its direction, and we're not just stopping at the numbers, we're also looking at a really crucial piece of corporate governance. The company is Solar Industries India Limited, and our mission here is to unpack their latest financials. That's for Q1 FY26, the quarter ending June 30, 2025. Plus, we'll explore their updated code on handling sensitive information. The official title is Code of Practices and Procedures for Fair Disclosure of Unpublished Price-Sensitive Information. Quite a mouthful. Think of this as your shortcut, understanding their performance and their commitment to being transparent. We're looking for the surprises, the so what behind it all. Let's get into it.
Yeah, it's a great combination, actually. The financials show the results, right? What the business achieved. But that governance policy, it shows the how, the framework for integrity, for trust, and sharing that information. You really need both for the full picture.
Absolutely. Couldn't agree more. So let's jump straight to those headline figures for Q1 FY26. Solar Industries announced some, well, pretty impressive numbers. Highest ever quarterly EBITDA, that's earnings before interest, depreciation, taxes, and amortization at 564 crore rupees. And also their highest ever PTE, profit after tax, hitting 353 crore rupees. Turnover stood at 2,154 crore. Big numbers.
They really are. And just to give some context straight away, that 2,154 crore turnover, that's a solid 28% jump compared to the same quarter last year, Q1 FY25. And both EBITDA and PAT showed really strong year-on-year growth too, up 19% and 17% respectively. It's also interesting looking quarter on quarter, while net sales dipped just slightly from the previous quarter, Q4 FY25, from 2,167 crore down to 2,154 crore in this quarter, the key thing is that both EBITDA and PAT kept growing compared to Q4. EBITDA went from 546 crore up to 564 crore, and PAT climbed from 346 crore to 353 crore. That suggests, they're getting better at turning those sales into actual profit. Improved efficiency. Right. That's a great point about efficiency, especially when sales are maybe flat or slightly down, but profits are still climbing. So, okay, beyond the absolute record profits, what about the profitability story, the margins? Did they hold up with that growth?
That's where it gets a little more nuanced. Because yes, record absolute profits, but the margins themselves, they saw a slight dip compared to last year. The EBIT margin for Q1 FY26 was 26.18%. That's down a bit from 28.1% in Q1 FY25. And similarly, the PAT margin was 16.37% this quarter versus 17.84% in the same quarter last year. So why that slight compression? Well, it looks like various costs played a role. For example, the cost of materials consumed went up 26% in absolute terms year on year. But actually, as a percentage of sales, it decreased slightly. However, other costs rose quite sharply. Employee costs jumped 40%, and other expenses surged by a pretty significant 48%. So those increases definitely put some pressure on the margins, even with strong top-line growth.
Okay, I see. So impressive growth, yes, but they were also juggling some rising costs. Makes sense. Given that big turnover number, where exactly did the growth come from? Was it spread out, or did specific areas really drive it?
It seems like it was really powered by two main engines this quarter: their international business and the defense sector. The international business, well, it had a fantastic quarter, hit a new record for highest quarterly sales, 826 crore rupees. That's a huge 43% year-on-year growth.
Yeah.
And it's backed by, their manufacturing plants in 9 countries and selling into over 90 countries. That global presence is clearly paying off.
Wow, 43% internationally is massive. And I guess defense was the other big driver you mentioned.
Absolutely. The defense sector was, frankly, extraordinary. Revenue grew 115% year-on-year. It reached 418 crore rupees this quarter. That's not just a strong number. It really signals a major and successful strategic focus for them.
115% jump. Yeah, that's definitely extraordinary. But did everything go that well? Or were there some parts of the business facing headwinds?
No, not all segments had the same success story this quarter. The MD and CEO, Mr. Manish Newell, was quite open about this. He pointed out that the early monsoon hitting India actually impacted the domestic explosives market quite a bit. So, for instance, their sales share to Coal India Limited, or CIL, that dropped by 3%, and the housing and infrastructure segment saw a 12% decrease in its share. On top of that, the mining industry generally saw lower demand. They attributed this to, well, milder heat waves than expected, that early monsoon again, and also some geopolitical factors. But despite those challenges, management sounds pretty optimistic. They expect growth to pick back up in mining and housing post-monsoon as things get back to normal domestically.
Interesting. So some domestic bumps, but heavy reliance on international and defense carried the day. That leads me to the defense sector again. With that kind of explosive growth, what's the future looking like? You mentioned strategic focus. What about their order book?
Right, and that's where the defense story gets even more compelling for the future. Their defense order book currently stands at around 15,000 crore rupees. And if you add in their orders from CIL and SECL, that's Singareni Collieries, which is over 1,800 crore, their total order book is sitting at a very substantial 16,800 crore rupees plus. And they specifically mentioned that getting their Pinaka rocket orders into full production, the commercialization that's expected to drive the, quote, next level of growth in defense. So it's locked in future work.
15,000 crore just in defense orders. That's huge. It speaks volumes about their capabilities. What about innovation in that space? R&D, new tech, especially with India's push for self-reliance, the Atmanirbhar Bharat initiative.
Yeah, they seem very focused on innovation, and it ties directly into that Atmanirbhar Bharat goal. It's quite impressive, actually. They've successfully tested Pargavastra, that's an indigenous anti-drone system, and also Rudrastra, which is a hybrid VTOL UAV vertical takeoff and landing unmanned aerial vehicle. Plus, they're getting repeat orders for things like UAVs and multi-mode hand grenades. That shows the users trust the products they're developing. But what really stands out is their position as the, quote, first private sector company in India for several major defense achievements.
Okay, firsts like that are always significant. Tell me more. That sounds like it goes beyond just financials. It's about their strategic role.
Exactly. It positions them differently. So they were the first private company in India to set up a fully integrated facility for a whole range of defense products, high-energy materials, propellants, warheads, rockets, the works. They were also the first to establish a complete integrated facility specifically for Pinaka rockets, and the first private company to get orders from the Indian Defense Forces for ready-to-use ammunitions. Even more significant, perhaps, the first to get defense export orders for ready-to-use ammunitions. On top of that, they developed, got orders for, and supplied drone-based loitering munitions all indigenously. And they developed 3 new types of explosives completely in-house: SEBEX-2, SEBEX-1, and SAMEX-4. These firsts, as you said, they're not just milestones. They really show Solar Industries is actively shaping India's defense manufacturing capability. It puts them in a very strong position strategically.
Yeah, those are genuinely impressive firsts. It underlines their leadership, their innovation, and that commitment to self-reliance really paints a picture of where they're headed.
Precisely. It fits perfectly with their stated vision of becoming a global supply chain partner in the defense sector.
Okay, so the numbers show strong growth, especially in defense, highlighting a strategic shift. But a company's value isn't just numbers, right? It's also about trust, integrity. Let's shift gears then to that other document, the Code of Practices and Procedures for Fair Disclosure of Unpublished Price-Sensitive Information. Why should you, the learner, care about something like this? Why is it important?
Well, this kind of code is absolutely fundamental for corporate governance and, frankly, for investor trust. It's based on regulations from SEBI, the Securities and Exchange Board of India, specifically the insider trading regulations from 2015, and its purpose is very clear. Make sure that any unpublished price-sensitive information, UPSI, for short, is disclosed in a timely and adequate way. It's all about ensuring uniformity, transparency, fairness, making sure everyone gets important information at the same time, preventing misuse, stopping insider trading, creates a level playing field.
Right. A level playing field is crucial. So how does Solar Industries actually do that? What are the practical steps, the mechanisms in this code?
The code lays out several key mechanisms. First, there's a big emphasis on prompt public disclosure. As soon as any UPSI becomes credible and concrete, they have to disclose it to the stock exchanges. And, importantly, upload it to their own website, www.solargroup.com, at the same time. So it's out there for everyone. Second, how they handle selective disclosure. If somehow UPSI gets shared with just a few people, even by accident, the company has to act fast to get that information out widely. Though it's interesting, they specifically note that rumors or media speculation don't count as selective disclosure, so they don't have to jump every time the press guesses something.
Okay, that makes sense. They react to actual slips, not just rumors. Who's actually in charge of managing all this? Who oversees this flow of sensitive information?
The main responsibility falls to the company secretary, who acts as the compliance officer. They oversee and coordinate all disclosures to the stock exchanges, analysts, shareholders, the media. Now, the MD and CEO, the CFO, and certain authorized communication folks can also communicate, but it's always supposed to be in coordination with that compliance officer. Also, for responding to market rumors, it's the compliance officer's job to figure out the facts and respond appropriately if the stock exchanges ask about rumors. They decide if a formal public announcement is needed to confirm or deny something. And finally, concerning analysts and researchers, the policy is clear. Only provide public information. Or, if non-public info is shared, like in a detailed briefing, it has to be made public simultaneously. And they even commit to putting transcripts of analyst meetings on their website. That's quite a commitment to transparency.
Wow, yeah, making transcripts public is definitely going the extra mile. Very transparent. Now, what about inside the company? How do they control this UPSI internally before it's made public? How do they stop leaks?
Internally, it operates strictly on a need-to-know basis. Simple as that.
Yeah.
UPSI isn't supposed to be shared with anyone except for what they call legitimate purposes, or if it's required for someone's job duties or legal obligations. And the policy actually gives examples of who might receive UPSI for these legitimate purposes. Think about people like the company's promoters, auditors, and their staff, lenders, key vendors or suppliers, bankers, legal advisors, consultants, registrars, valuers, credit rating agencies, people who genuinely need that info to do their job for the company. But there's a crucial rider. Sharing for a legitimate purpose must never be a way to get around the insider trading rules. That's explicitly forbidden.
Okay. Need to know and legitimate purpose seem like clear guardrails. But when information is shared, even legitimately, how do they keep track? Is there an audit trail? How is accountability maintained?
Yes, and this is a really critical piece, the digital database of recipients. The compliance officer or the CEO or CFO, if a CEO isn't available, has to maintain this structured digital database. It logs every single person or entity that receives UPSI under these regulations. And it's not just a name list. It has to include the recipient's name, who shared the info, what kind of UPSI was shared, the recipient's organization, their contact details, address, email, and their PAN number or another official identifier. Think of it as a detailed logbook for sensitive data. And critically, this database needs strong internal controls. It must have timestamping and audit trails built in specifically to ensure it can't be tampered with. It's designed to be a robust, verifiable record.
That sounds incredibly thorough. A non-tamperable digital trail for who knew what and when. So wrapping things up for this deep dive. We've looked at Solar Industries Indy Limited's really strong Q1 FY26 results. That growth, especially from international and defense, is quite something. And then we balance that with a close look at their detailed governance approach, their updated code for handling sensitive information. That focus on prompt disclosure, internal controls, the digital database, it shows a real commitment.
Exactly. You see the operational strength on one side, and on the other, a clear, structured commitment to transparency and fair dealing. Both are vital for building long-term trust and value.
Definitely. So for you, the learner, here's something to think about. How does a company's demonstrated commitment to transparency and strong disclosure practices, like we've seen with Solar Industries, actually influence how investors see them? Especially today, right? With so much information flying around, how much does that trustworthiness factor into long-term value? What part of these results or these transparency efforts really stood out to you? Something to mull over.